Good morning, Alex Cole. How are you on this Friday, April 16th? Welcome to GoNoGo Research Flight Path Review.
Good morning, Tyler. Very well, thank you. It's a beautiful day, sun shining.
It's gorgeous.
All the rain from yesterday's gone, so
All the new sprouts, all the new shoots, and it looks like same is happening for our bull market. New
yeah,
shoots and starts all over the place.
yeah.
Fresh breakouts.
Good for the plants.
Good for the plants. Good for the accounts. Let's start with a top-down approach. Give us a quick view across all asset classes. Where should investors be positioning, Alex? Risk on, risk off.
Well, as you can see, we flirted briefly with a bit of concern a couple of weeks ago, but we seem to be strongly risk on again. The top panel here is the equities represented by the SPY and solid blue for a couple of weeks now, uninterrupted, go trend. Treasuries, as you'd expect, therefore showing us the no-go colors. Commodities back in trend, which is interesting to see because I know a lot of analysts on the street are talking about, really, really long-term bull market in commodities. So that is now back in a strong go trend. Dollar starting to struggle. We saw this week. We saw a heavy pullback shown by the aqua bars, and then an amber bar, and now the first of the no-go colors on the dollar. So that's a talking point as well. And of course, I'm sure everybody knows where Bitcoin's gone over the last week.
Pretty impressive run for all digital assets. I know a couple of weeks ago in GoNoGo Research, you were writing about Ethereum outpacing Bitcoin, so kind of looking at that relative move. And not to overcomplicate things too much, but what you're looking at there in the second panel with IEF, that's the rate, not the yield, for 20-year U.S. Treasuries. And I think the markets got a little spooked just by how far and how fast rates were moving. The yields were turning up, and certainly still extremely low when you look at a long-term perspective. That 40-year bull run since 1981 for the fixed income market seems to have maybe turned up a little bit, but we're still not yet to the pre-pandemic highs, and seems to have settled in right there at that 165, 170 level. So nice to see things settling out a little bit in the treasury market, no longer getting any spooked in the equity sector.
Yeah,
So
that second panel is prices, right? Not rate.
Price, not yield. Thank you. And they do move in inverse correlation, right?
Yep.
Well, let's dive into the equity sector. We're seeing that strong blue go trend in the top panel. If we look at the equities buy sector on a relative basis, if we're looking at each of the S&P 500 sectors against the S&P index as a whole, if that's our benchmark, let's see where leadership and laggardship lie in terms of the relative outperformance. So again, this is going to be the sector rel map. Tell us what jumps off the page for you, Alex.
Absolutely. This has been a chart that's changed a little bit over the last couple of weeks, and we've seen some themes come and go, and it's nice to see some of them return. So the top panel, we're seeing materials back in a go trend. So that sits well for the idea that the economy is going to continue to reopen and reopen well, especially with the vaccine rollout. But at the same time, we've also seen a return to some of the more cyclical sectors. We see discretionary in a go trend having been underperforming for a couple of months. And the same thing down here, if we look towards the lower part of the map in this eighth panel, technology as well coming back into a go trend, but perhaps confounding some utilities as well in a strong go trend at the bottom. So we're seeing some outperformance across some different areas of the equity markets at the moment.
And again, this is the relative performance of each sector against the S&P 500. So on an absolute basis, many of these sectors are continuing to move higher, but relative to their benchmark, where we're trying to figure out leaders and laggards, where you might want to do some heavier allocation. It is nice to see both materials, industrials, combined with some of the growthier sectors in technology and consumer discretionary. And we're going to dive into a few individual charts just to look at what we're seeing both by the sectors on an absolute basis, and then some individual names. So let's
and
go ahead.
what's incredible is that we've all seen the run that the SPY or the overall market has been on in the last couple of weeks. So to see 4 of those sectors relatively outperforming, shows what kind of alpha you could be generating there. Like you said, some of those other ones that are in the purple no-go colors are absolutely in pure go trends, just relative to the base. They might be underperforming, but look at what strength you're seeing from some of these sectors that are outperforming even this run we've had in the SPY.
Brilliant. All right, so let's dive into just the XLK, the individual chart, the GoNoGo trend chart of the technology sector ETF, so that we can see on an absolute basis kind of what that's looking like on the daily. Let's pull that up. Thanks, Alex.
Yeah, absolutely. So this is XLK on a daily chart, and we talked about this week in the flight path about how it was just managing to surpass prior highs, and we were going to look to hope to see some consolidation above those levels. And yes, I mean, it's raced off, had a bit of a pullback midweek, or maybe that was Tuesday, but we're really now seeing some surging ahead to all-time highs on the tech sector.
Absolutely. So again, subscribers every Monday morning before so pre-market open, a flight path review that takes into account some of the strongest trends and gives some ideas for high probability positioning for the week ahead. So today we're just reviewing what went out to subscribers 5 days ago to see how those ideas performed. And certainly the XLK breaking out to all-time highs is a very significant move because you don't have additional overhead supply. You're not likely to find important resistance levels for securities or indices that are breaking out to all-time highs. And certainly we're seeing that as well with the elevated oscillator. We're seeing strong momentum. Obviously some consolidation on Tuesday, having a down day to digest some of those impressive gains, but continuing on. And we're seeing a lot of institutions allocating back to growthier names as, like we mentioned, the rates sort of settling down, not scaring anybody in terms of what the stretched valuations are for a lot of technology companies in these growthier sectors. So that's great to see. If we pull out a little bit, Alex, what does that look like on a weekly basis? We're looking at the daily, and what a beautiful long-term trend.
Yeah, this is a fantastic chart, and it's exactly what you're looking for. You're looking for a trend identified, uninterrupted, strongly now since the pandemic lows, the blues and aquas, and then you're loving it when you see these re-entries throughout the trend. And again, we talk about this all the time, but what you're seeing then is rally in price, surge in price, correction, healthy correction or consolidation or pullback against the primary trend, but then support at the zero line on the oscillator. Remember, the GoNoGo oscillator gives you that completely objective level of support and resistance when in trend. So we see these surges of momentum line up with price movement, but then when price consolidates or corrects in a healthy trend, you're looking to see if that oscillator stays at zero, meaning it doesn't go into any kind of oversold readings. And then when it rallies off the zero, you get these go trend continuation icons, these green circles. And look where we are right now, a strong surge in price, consolidation or short-term small correction, counter trend correction, highlighted by the red arrows after these peaks in price. And then now momentum coming back in the direction of the trend by finding support at zero. And that was demonstrated earlier this week by that green circle. So the weekly trend for XLK looking very strong. So that would suggest to us that we would then be looking for go triggers on the shorter time frame for the daily and even lower.
And from a risk management perspective or risk appetite, I should say, it's going to be different for every individual investor, and your time frame is going to be what you're comfortable with. For self-directed investors that are looking to rebalance your portfolio, maybe on a monthly or quarterly basis, looking at weekly charts is going to help you stay with trends that are truly healthy. Uh, Obviously, for intraday traders, looking at this weekly chart is really helpful to understand the broad trajectory, the primary trend of whatever asset class or security you're dealing in. But certainly, we see on this chart of the XLK that all of the weakness through the month of February and March, as it was pulling back, and certainly on a daily chart, you're seeing some no-go indications, and really the idea that maybe tech was overdone, maybe we were looking at a bigger inflation trade, and coming out of all of those growth names to really play strong in more defensive and cyclical sectors like materials and industrials, and then even utilities. It doesn't look like that thesis has played out. It looks like we are seeing a very robust bull market, early stage, where there's a lot of rotation and you've got strong participation in terms of breadth within the market internals. So this is really nice to see that tech has come back into favor. We didn't lose that longer term trend at all, and in fact, it's surging higher. So let's dive in, Alex. If you've got some time, let's look at some individual names within the tech sector. Why don't we pull up a chart of Apple? Because I think that's really telling the story of what we've seen in the XLK.
Oh, I think I typed something wrong in there. Hold on one second.
No problem. Now, Apple is the largest holding within the XLK technology sector. So we're looking at what may be leading the index higher. It's 21% of the sector. So last week, subscribers looking at Apple on a weekly basis saw all of that same sort of trend, counter trend correction, a little bit of a pullback and weakness, and then a fresh breakout. So we can start with the daily. And Alex, I know for subscribers, this was a really healthy chart in terms of what you could see from a classical technical analysis perspective, as well as within the GoNoGo trend system. So walk us through all of these additional lines and the annotations you put on here.
I get a little excited at a chart like this. There's so much you can do, so much you can find, so much you can show. So we've been tracking this chart for a long time. As you can see, the lines on here from the first half of the chart, which really helped us highlight the coming counter trend correction. So whenever you see diverging lines, then that signals increased volatility, and it's usually a bearish signal. So the fact that these trend lines were moving slightly apart really sort of put us on alert here. And when we saw the breakdown from this trend line and the change of color, we knew that this primary trend on the daily basis had changed. Now, then we entered into the no-go correction. We saw it playing out again, like we've said so many times, that the break in important levels seems to coincide with go-no-go trend color changes. So we were able to find a downward sloping trend line, which was running through these highs. We also then noticed a higher low. So we see this now as perhaps a weakened no-go, because again, in a no-go, you should have lower highs and lower lows. So the fact that we got a higher low here, we saw the oscillator ride the zero line for a long time, and then break into positive territory, and then the go identification coming on a break of that trend line. So so much in terms of classical technical analysis with just using support and resistance levels and market supply and demand, and then highlighted really by the color changes and what's happening with the oscillator. So I think that we highlighted this chart on Monday because it had just
broken out
of this resistance levels, and it's only strengthened this week. Again, Tuesday was a pullback day, but we've strengthened this week. We're in a bright blue go trend. Oscillator is in positive territory, but no longer overbought. So the daily chart here on Apple looking pretty healthy.
Fantastic. I really appreciate the simplicity of go-no-go charts, where you're getting all of the technical trend conditions, embedded right into the bar chart so that you don't lose what is the most important indicator of all, price, and price action being what we're all most interested in, but the ability to do some classical analysis right on these charts and not obscure all of that important information with additional indicators. So thank you for that, Alex. Let's move on from technology and dive into the consumer discretionary sector. Obviously, on the REL map, we've seen some changes this week, but I know for readers on Monday, what we're looking for with the XLK coming out of sort of a long-term period of sideways consolidation. Let's see what we're looking at on the XLY from a GoNoGo trend perspective, this being the daily chart.
Yeah, again, just nice to highlight the things that we all look for, but we can now, like you said, get that idea of technical trend identification by blending all of these indicators into the colors on the chart. But we can still see, like a lot of, you can call this, we talk about how you can call these patterns all kinds of things, but you're definitely seeing market action play out on the chart. Maybe a continuation head and shoulders, which is fairly rare, but whatever you're seeing here, there's a resistance level that's been tested and then broken out. So, and we saw that happen over the last couple of weeks. The Go identified towards the right half of this pattern. Then we saw a trend continuation icon as it really rallied up against the resistance line, and then a gap up to break above it. And now we've been off to the races really on XLY.
Fantastic. I hope your dog may have finally gotten the keys out of the dish or whatever she was going after. But
he's just wandering around here making a nuisance of herself. But I think she's settled now.
All good. I didn't want any of our listeners to think that maybe you were being burglarized while we were recording this video.
But that's the focus, right? Somebody's running off with my car keys.
They're
going. It's okay.
You don't care about a stolen car as long as you capture this trend. That's fantastic. So diving in further to the consumer discretionary sector, the largest holding being Amazon, 23.5% of the XLY. What do you see from this from this trend and the breakouts as we dive into individual names like Amazon? Is the sector at large participating in this new breakout, or have we seen some stagnation from the mega cap names within the sector?
One sec.
Yeah, no problem. And I know for subscribers, what we were looking at was some overhead resistance. Amazon coming up to price levels where it was going to need a strong momentum for the breakout. And let's see what happened so far this week. And again, it's pre-market Friday morning. We'll get to know how Amazon did throughout today.
And here's where you really benefit from having an understanding of some of the simple concepts of technical analysis in conjunction with using a tool like this. Because we on Monday, let's see, this is Monday here on the 12th, and we noticed that looking good in a Go trend, similar chart to the XLY in that you've had this correction period and you've broken above resistance, but there are these prior highs here that you have to worry about, which was a little different from XLY. And then the following day, on Monday, actually on Monday's open, we really ran right up to that high and fell away perfectly. I mean, it's exact, the fact that played out as resistance, and we've come back a little bit. So Amazon is going to need another surge, a fresh surge, to get above those prior highs, which does set it apart a little bit from the sector itself.
So in technical analysis, we call these important levels of support and resistance, right? The behavioral psychologists, they refer to our human capacity for an anchoring bias. And what's happening there at these levels, that you've got large institutional players who had strong ownership at that prior high. They've ridden it all the way down. They're coming back to break even. And it's a natural human emotion to want to just get out of a bad trade that you didn't cut short, right? As technical analysts, we have very strong risk management parameters, and we know that we're going to dig small holes. We're going to get out quickly when the trend moves out of favor. But for a lot of institutional money managers, believe it or not, that's not yet a part of their practice. They don't have a very strong sell discipline. And so what happens is they've been suffering now for 2 months. And the fact that Amazon finally made it back to a break-even level, they're exiting, right? You see that happen over and over and over again. So Amazon is probably going to come back to these levels, retest that area of resistance. Maybe it breaks through next time, or maybe it takes 2 or 3 tries to get through that resistance level. But we know that this is an important level, and you can kind of see it coming by looking at a longer-term historical view. So that's a little bit of the story on Amazon. Didn't get enough momentum to break out above resistance this week, but we'll be watching to see how that plays out. Let's take a look at another name, Alex. If you've got time, pull up a chart of Tesla. And that's 13.5% of the consumer discretionary sector. So these are the largest by cap weighting within the sectors. Should be pretty representative of what we're seeing in consumer discretionaries. What do you see here on the Tesla chart?
Tesla really fell into the sort of quagmire of all of that doubt surrounding the tech sector, I think, Tyler, even though it's, like you said, it's one of the biggest companies in discretionary, but obviously being a tech-heavy company. So it really pulled back, along with some of the other things that people were looking at, like ARK investments. It really pulled back. So it's still far away from its prior highs. So this is interesting because the sector is breaking out, remember, 2 all-time highs. And then some of the biggest names, we just looked at Amazon, and we're looking at Tesla now, not breaking out to all-time highs. Amazon was closest and tried and failed. Tesla is still some way off all-time highs. So there's a couple of ways to sort of think about that. Is it an opportunity because Tesla is likely to play catch up? Or is there something a little bit unhealthy or concerning about Tesla itself? Why is it following suit? From a technical perspective, it seems more likely that it'll play catch up. You've got a triangular pattern here with slightly decreasing highs and rising lows. You've got the oscillator was able to get back up to zero, rode it for a very long time before breaking back into positive territory, signaling some positive momentum. Then you got towards the end of the pattern, the amber bars, and now finally the go flag identified on the breakout. And now we're consolidating at those levels. So from a technical perspective, I'd be more likely to, or more inclined to think that there's some upside here for Tesla.
Yeah, I think it's been a challenging environment over this last quarter when we saw these names really carry us out, through the post-pandemic rally in 2020. It was a tough thing for a lot of investors to embrace that rotation, to look at industrial names. It's exciting to talk about the electric vehicles market. Maybe less exciting to talk about Old Dominion freight lines and aerospace and defense and big shipbuilders. But it does appear that part of the economy is coming back online. And yet the disruptive technology, the impressive run that a lot of the big technology names and these very strong growth sectors have had, it's not over. And I think that's the tell from these initial breakouts, these return to go conditions, is that investors aren't simply done with the growth sectors. And they are looking for those disruptive technologies and incredible companies to continue to perform and carry this economy higher. But Alex, before we wrap up for today, I wanted to ask if there is any last chart that you would want to show us, what you're looking at as we come into the end of this week, or maybe even pulling into the week ahead. Perhaps if I know you well enough, it'll either be the dollar chart or a Bitcoin chart.
Well, if you don't mind, I might surprise you. What do you think? Shall I surprise you?
I love surprises.
So,
bring it on.
You know what? I will surprise you this week, just because there's been a lot of news surrounding Johnson & Johnson this week. Obviously, not great news with the vaccine being temporarily halted. And so I find this chart very interesting because we have a fresh go signal coming yesterday after a pullback from a short-term high highlighted by the red arrow here. So Johnson & Johnson really, to me, seems to be trying to make up its mind. It's corrected since its really strong highs from early February, but the no-go never really took hold. The GoNoGo oscillator broke back into positive territory. A new go was identified, which has since come back, but it only came back to amber before turning around and firing off a new go signal yesterday. And the oscillator is again at 0. So this is one that I think that I'll watch over the next week or so, depending on what happens with the news surrounding the vaccine. Will it be enough negative press to push the oscillator back into bearish territory, in which case we may well see another rollover to test these lows from March? Or has that already been priced in, and the fact that we have a go colors over the last couple of days, has that news been priced in? And if Johnson & Johnson can get back on track and the vaccinations can go ahead again. Remember, it was, I think it was less than 1 in a million cases.
Exceedingly rare.
For vaccine rollouts, so
Yeah.
7 million shots have been administered, 6 cases of blood clots. So, literally less than 1 in a million. So if it's been paused out of an abundance of care, of caution and safety concerns, then perhaps this has been priced in. If the oscillator then gets back above 0, perhaps we see a new go move on Johnson & Johnson. So how is that for a surprise to end?
A wonderful surprise, Alex. I really appreciate you taking the time. And certainly we encourage everybody who's listening to get out there, get yourself a vaccine. Let's keep everybody safe. There's a really nice, transparent, extra cautious approach by Johnson & Johnson, the federal authorities, to just to make sure that that all the I's are dotted, T's are crossed. But yes, we're talking about an extremely rare, low statistic anomaly, and hopefully we'll see the whole country resuming our prior Americanness sometime this July.
And if so, we'll see that played out in the Johnson & Johnson chart. There you go.
Exactly. Thank you so much, Alex, for walking us through GoNoGo research, flight path review for Friday morning, April 16th. We'll look forward to seeing you next week.
Thank you, sir. Have a great weekend.
You as well. Bye-bye.